A report from Bloomberg in 2016 made the 1974 legendary bond trader from Salomon Brothers brokered a covert do-or-die deal that would reshape U.S.-Saudi relations for generations, a public knowledge. It was July 1974 when the then newly appointed United States Treasury Secretary William Simon and his deputy Jerry Parksky began a diplomatic tour in Europe and in the Middle East. The true purpose of this trip was kept in strict confidence within President Richard Nixon's inner circle. According to Bloomberg, 1974 had been a tense year due to the oil crisis, an embargo by OPEC's Arab nations, retribution for U.S. military aid to the Israelis during the recent Yom Kippur War, quadrupled oil prices, inflation soared, the stock market crashed, and the U.S. economy was in a tailspin. The oil embargo was an important turning point in world affairs because it recognized for the first time the geopolitical power of oil and the dependence of first world countries on oil in the Middle East. Happening along with embargo was a decline in European and U.S. domestic oil production and the decision by Nixon to float the dollar. Floating on the dollar means that the value of the US dollar is no longer pegged to gold, but can change based on international markets. At first, the system of every US dollar is backed by gold worked so well because the US owns more than half of the world's gold. However, in the late 1960s and early 1970s, foreign countries began to question the system and demand the redemption of their dollars to gold, which threatened to undermine the U.S. financial system. Nixon froze the dollar and eventually took it off the gold standard and made the dollar the floating currency that exists today to stop the run on American gold. At a 4-day layover in the coastal city of Jeddah, Saudi Arabia, Simon's goal is to neutralize crude oil as an economic weapon and find a way to persuade a hostile kingdom to finance America's widening deficit with its newfound petrodollar wealth. According to Parksky, Nixon made clear there was simply no coming back empty-handed. Failure would not only jeopardize America's financial health, but could also give the Soviet Union an opening to make further inroads into the Arab world. According to a diplomatic cable obtained by Bloomberg from the National Archives database, the plan was that the U.S. would buy oil from Saudi Arabia and provide the kingdom military aid and equipment. In return, the Saudis would flow billions of their petrodollar revenue back into treasuries and finance America's spending. After months of negotiations during discreet meetings, there remained one crucial stipulation. King Faisal bin Abdulaziz Al Saud demanded the country's treasury purchases stay strictly secret. It had only been months after the Yom Kippur War, and there was still plenty of animosity among Arabs towards the U.S. for its support of Israel. Indeed, the deal stayed secret for 4 decades until 2016. According to spokesman Whitney Smith, in response to a Freedom of Information Act request submitted by Bloomberg's News, the Treasury broke out Saudi Arabia's holdings for the first time in 2016 after concluding that it was consistent with transparency and the law to disclose the data. A former Treasury official speculated the official figure vastly understated Saudi Arabia's investments in U.S. government debt, which may be doubled or more. Some analysts theorize that the kingdom may be masking its U.S. debt holdings by accumulating treasuries through offshore financial centers, which show up in the data of other countries. As per New York Times report in April 2016, Saudi Arabia warned it would start selling as much as $750 billion in treasuries and other assets if Congress passed a bill allowing the kingdom to be held liable in U.S. courts for the September 11 terrorist attacks. According to Citizen Truth Organization report, the threat comes amid a renewed push by presidential candidates and lawmakers from both the Democratic and Republican parties to declassify a 28-page section of a U.S. government report 2004 that is believed to detail possible Saudi connections to the attacks. The bill, which passed the Senate in May 2016, went to the House of Representatives. In response to the issue, both Saudi Arabia's Finance Ministry and Monetary Agency have declined to comment on the potential selling of treasuries. Added to that, in 2016, Saudi Arabia was in the throes of a brutal fiscal crisis with the biggest budget deficit in a quarter century, due to costly wars to defeat the Islamic State and proxy campaigns against Iran. Consequently, the decades-long interdependence between the US and Saudi Arabia from Simon's debt deal showed signs of dissidence. The US has taken tentative steps toward reaffirming stability with Iran, including former President Barack Obama's landmark nuclear deal in 2015. The US shale boom also made America far less reliant on Saudi oil. Jerry Parsky, now chairman of Aurora Capital Group, a private equity firm in Los Angeles, said the secret agreement with the Saudis should have been dismantled years ago and was surprised the Treasury kept it in place for so long. Parsky affirmed to Bloomberg that the deal was a positive for America. I am Lovely Montoya of Manila STV.